Good morning. This is Eric Brotman, the CEO of BFG Financial Advisors in Lutherville, Maryland. Welcome to the benefit of benefits, the why and how of offering employee benefits as a small business. And we are a small business, and so we're going to talk a little bit about not only how we work with clients, but also how we've handled some of our own. And we have a very special guest who really knows her stuff with us. So, Leslie, if you'd introduce yourself, we can get
Yeah.
started.
Good morning, Eric. I am happy to be here. I am Leslie Shields and I own the Shields Agency. I've been in benefits and health insurance for it's our 10th anniversary. We're throwing a little shindig.
Happy anniversary.
Thanks, 10 years. And then you kind of look at 10 years and you go, holy crap, how was that 10 years?
Well, look, I'm close to 30. I'm more than 30 years in practice.
Yeah.
So that's actually terrifying when you think about it. But
Yeah.
yes,
Yeah.
congratulations. That's big.
Yeah. It's like, what do they say? That the days are long and the years are short.
So it's like parenthood.
Like parenthood. Yeah.
Okay,
Yeah.
excellent.
My business is, I've had my agency since
Mhm.
November of 2019. So almost 5 years. I've been in the
Okay.
business 10, and my son is also almost five. So if you do the
Oh.
math on that, I was building a brand new agency while I was pregnant during 2020. So that was fun.
Well,
But
enjoy a 5-year-old because my daughter's turning 16 and I'm invisible now. I went from being
oh,
her
yeah, I
favorite
heard that.
person to invisible, and it's
Yes.
real and it's
Yep.
very,
I
very
heard
hard.
that. Yeah.
Well, so why don't we talk a little bit about what you do and then we'll dive in and
Yep.
talk about some benefits.
Absolutely. So our agency works with businesses less than 150 employees, and we really hone in around 50 or under 50 as well. We are not scared. I know some agencies only want the big guys, and we really niche in the smaller businesses and helping them find the right solution, whether it's an individual option for an owner, an entrepreneur, or it's an option for the entire company. And then talking to them about, even though as a small business, why should you be offering benefits? And what does it do for your recruiting and your retention? And what are the most strategic ways you can go into that?
All right. So not only do I get to be your co-presenter and talk about the importance of benefits, I also get to be your prospective client. So we can wear
Yeah,
that
there you
hat
go.
today too, because
There you
at the
go.
end of the day, these are things we need. So let's dive in, and I'll let you get started with the
Mhm.
why, because ultimately, if you start with
Yeah.
why on anything, that's a good start.
Yeah, we kind of set right up for that, didn't we? So
We
why?
did. Right. Well, it
It
wasn't
just
an
happened that
accident.
way.
This
Yeah.
wasn't random.
Yeah. So why
Yeah.
offer benefits? If you're a small business, I know a lot of businesses are growing and they're thinking my budget and where am I going to put it? And I'm not have to offer benefits until I have 50 employees. So that's over here. I'm a business owner. My spouse works. I have my coverage through my spouse. We're all good. But why? At that point, if you're that company, why should you be entertaining and thinking about offering benefits at your company for your employees? And the two biggest reasons are recruitment and retention. I know in Texas, so I'm based in Fort Worth, Texas, we work with companies all over the country.
Mhm.
Depending on your state, is going to equal the quality of individual benefits your employees
Mhm.
might have available to them in on
Mhm.
the say on the marketplace, or they may get their benefits through a spouse. And when you're going out and you are recruiting, if your state doesn't have the best benefits in the whole world, or if your prospect for employee doesn't have benefits through a spouse or isn't
Mhm.
married, you've just pigeonholed yourself into your candidates because you've told your candidates, I don't offer benefits. If you're not someone who has access to good benefits on your own, then you're not a fit for our company.
Interesting. So I first of all, I'm in your camp. I think
Mhm.
employers do benefit and recruitment and retention are the things, but I'm going to push back on you anyway because
Okay.
it'll be more fun
More
if we
fun that
debate a
way.
little bit. It'll be more fun if we
Yeah.
debate because so there's as an employer
Hmm.
and I started this company in 2003 with one full-time, one part-time person and very sparse benefits, as you might imagine. They were there, but they were sparse, and now there's a whole handbook and a whole bunch of things. But um, I, I think there's a feeling that it is it is not the first thing employees think about when they talk about how they're being paid. So
Hmm.
if you ask someone, let's say you've got someone with an $80,000 salary and $20,000 worth of benefits.
Okay.
To the employer, it's $100,000 a cost for the
Yep.
employee.
Yep.
But if the employee is asked, what do you make? What do you earn? They're going to say 80,000
Hmm.
because so often people don't consider the cost or value of those benefits in the dollars and cents. So I'm wondering, in that situation, are there situations where you're better off paying somebody $90,000 or $95,000 and having them do their own benefits, or is recruitment and retention, particularly recruitment, is that impacted more by saying your salary's here, but we have this amazing benefit package? What has your experience been?
Yeah, so I would say that line of thought is changing, especially for your younger employees and your older
Hmm.
employees,
Okay.
because healthcare becomes much, much more important. Our
Okay.
younger generation is very interested in benefits. In
Okay.
the salary is not the number one qualifier for them. They're looking for benefits, culture, quality of life when they're entertaining, where they're going to be placing their time. 60 hours a
Okay.
week, 40 hours a week, 80 hours a week, depending on what you're doing. And so I would say that
Yeah.
line of thought is changing. And the way we talk to our and advise our clients is
Hmm.
to really lay that out. And so being very transparent about the cost of benefits is, look, we are paying $500 a month. We are paying $400 a month. Here's our contribution to your
Hmm.
health care. And
Hmm.
it really including that very clearly into offer packages. So that way they can see what their um, entire salary plus benefits looks like.
Well, and for the employer, there's also some tax benefits to
Yeah,
doing
there's
this
absolutely. Yeah. And
because you're not paying FICA and Medicare on things that are going to benefit costs,
yeah,
whereas you are paying those extra taxes on things going to salary.
you
So
are.
all things being equal, a dollar of benefits is cheaper than a dollar of salary.
It is. And I'm not a CPA, so I won't pretend to be, but
I'm not either.
there are some tax benefits to the money you put into contributions for your employees' benefit plans, depending. And I know the medical piece in particular, and then when you start looking at other benefits such as 401ks and that kind of thing, there are other tax benefits there too.
Now, one thing I've heard a lot, and felt a lot as a company with under 25 employees, is that the access to benefit plans for really small businesses, for those 10 to 25 or 30 people, are not nearly as good as the ones for huge organizations where there's a ton of negotiation room with a health insurer, for example, or a disability or life insurer or others. A lot of times people say, well, gosh, my spouse's benefits are better because he or
Mhm.
she's with the state and they have government benefits, or because there's other things. It's hard as a small business to compete
Mhm.
with the big guys
Mhm.
on benefits.
Yeah,
You can compete on salary maybe, but it's hard on benefits. What do
benefits.
you say to somebody who goes, gosh, are we better off having a benefit plan that's not great or not having one?
Yeah.
I would think it's better to have one that isn't perfect.
Yeah.
But what are your thoughts on that as an
So,
employer?
yeah, here's what I'd say is, for the most part, a spouse's offering your spouse as the employee, it's probably going to
Hmm.
have great coverage especially if they work for the government. But say you have a teacher for
Hmm.
for spouse independence on pretty much most employers' plans,
Hmm.
they're going to be expensive because they don't have contributions. And so anything you offer, for the most part, now you can have some really stellar companies, like big
Hmm.
companies who may do some contributions towards spouse independence out there.
Hmm.
But for the most part, you as an employer giving a 50% contribution on the employee's cost is going to be less expensive, and it's going to be pre-tax if it's structured properly for
Hmm.
your employee than it would be going on their spouse's plan.
Got it. Got it. Okay. And then of course the employee has to decide which plan is better for
Mhm.
our kids
Yeah.
or dependents if that
Yep.
happens, and
Yep.
there's ways to do
Exactly.
that.
Yep.
So let's shift gears. We talked
Yep.
about the benefit to the employer. It's easier
Yep.
to attract employees. It's easier to retain employees. It becomes part of a full wellness, right, for
Yep.
employees. And employers can feel good about that. At the end of the day, we want to
Yeah.
take care of the single most important people in our world, which some people think are their customers or clients. It's not. It's your
Sure.
employees, because they're the ones you spend 40 hours a week or more
Hmm.
with. They're the ones whose lives are inextricably linked to yours.
Yeah.
And if you have happy employees, they will go to the nth mile for you. So let's talk about what employees gain from
Hmm.
having access. And we could talk about lots of different kinds of benefits, and we will, but just in general, what are the things that employees maybe look for or benefit most? We've listed two. There are probably 20 more. But let's
Yeah.
talk about lack of access, because that to me is a screaming red flag. What does that mean to you?
Yeah. So most states, there are a few states out there that still offer individual PPO plans, like say through the marketplace or the really, which is really the main offering if you were going to go out and seek benefits on your own. Most of them only have HMO plans, and so that and it, those of us who know HMO, PPO, PPOs tend to have much larger networks, right? So if you have a
Hmm.
doctor you love, there's a solid chance they're taking a big PPO. HMOs tend to have more narrow networks. And so
Hmm.
by offering benefits through your company, you can offer a rich PPO offering and you can offer a less expensive HMO offering. So we usually present several different levels of plans to employees so they can pick what works best for them. And that's where a brokerage or an agent is going to come in, is they're going to help your employees look at those plans and decide what fits their needs, what's most important to them. Is it value and price, or is it access to coverage with the PPO? But the lack of access is going to be if an individual had to go and look for their benefits on their own, because those options are limited.
So, as an agent and as an agency, is your loyalty to the client, the employer, or to the carrier, or both? How does that work? Are you an
Yeah, so
advocate for one party or the other, or do you have to sort of walk that line?
yeah, our job is benefits are hard, and the health insurance system that we're in as a whole has some rough spots to say the least. Um,
Yes, it does.
yes, it does. And so our job is to help our clients find the best fit. And so we're an independent agency. Not everybody out there is, to be clear. So we
Hmm.
actually work with about five different wholesalers and some really strategic options. And I would say too that if your agent is not very experienced, they may or may not have knowledge and breadth and access to some of these more strategic plans. So that's what we do, is we go out and we're just constantly learning and evaluating products to see who has the best fit. And our loyalty is to our clients. And if
Okay.
we've worked
So,
with a carrier and we're like, oh my God, this was the roughest experience ever, we take that knowledge and then we share it through experience and say, okay, we're not
okay.
going to do that again. That, and it has to do with more than just price. It has to do with claims being paid. It has to do with customer service. It has to do with if there is some kind of hiccup or something missed or something in the plan, like how well is that carrier servicing our client? And how well are they servicing us as an agency? Because our job is to make our clients' life easier. And if a particular carrier is making our lives hell, that doesn't serve anybody.
All right, very fair. So let's talk about financial wellness, because there are lots of different ways to look at this. It's something that we take to heart and spend a lot of time on at BFG, but there's a lot of different ways to look at financial wellness. One is that just by having benefits, you're more likely to take care of yourself. If you have a decent health insurance, you're more likely to have a primary care physician. If you have a primary care physician, you're more likely to be proactive with your care. Our system of healthcare in this country is so much around sick care instead of well care.
Mhm. Mhm.
And that is something we could debate, but that requires single malt. In terms of the rest of the financial wellness is employees have a hard time maybe understanding, discerning between choosing. You said two health options. Sometimes there's six.
Oh yeah.
Um, it's a daunting thing. HR departments are not allowed to
Mhm.
help to a great extent. They can say, here are the 26 forms we need signed by Friday, but they can't guide you very much. And that's true for ERISA retirement plans as much as it is
Mhm.
for health insurance and other insurances.
Yep.
But financial wellness is also its own animal.
Yep.
We do financial wellness programs for-profit and nonprofit organizations where we actually do consultations with employees. We've met with close to 1,000 employees from a number of organizations over the last half dozen years. And what we find is that there's an incredible amount of disinformation and an incredible amount of blind spots. You talked about blind spots or hiccups, where people haven't named a beneficiary for something, or they haven't made an election. They had to choose between disability plans and they didn't, or they didn't choose right because of their situation, or they're worried about something financially and have no place to turn. It could be a debt issue. It could be a tuition issue, the cost of school. It could be a medical bill or other issue. I've often said that money's a little like oxygen. When you have enough, you don't think about it, and when you don't have enough, it's all you think about.
Yeah.
So I think selfishly as an employer, and fortunately we're in this business, so it's very easy for us to offer this to our employees because we do it ourselves. But for those who aren't in this business, If your employees are thinking about money or worried about their next rent payment, mortgage payment, tuition payment, car payment, whatever, if they're worried about money, they're not thinking about work. And so I
Yeah.
actually think productivity is better
Hmm.
when there is a wellness component and someone objective who can actually render that. So I think employees benefit a lot of different ways. One is having that access that you talked
Yep.
about. One is having some choice. Ideally, one size never fits all. We all know that. So it's good to have some options. Let's talk about a couple wins and losses because we've seen some of both naturally, and I'm sure you have too. What's a good win? Give us a good story. Let's start the morning strong.
Yeah. So I would say, Eric, just to touch on your financial wellness to support that, I will tell you I was
Yeah.
hiring recently for a part-time admin,
Mhm.
and the number of applicants I got that were working full-time remote jobs whose intention was to double layer and
Mm.
work from two employees because of their financial situation was unreal. It was shocking.
Wow. Yeah.
And so I would support the
Wow.
financial wellness piece of that.
Well, which makes you wonder, are they actually putting in a full day's work at both
No, they're
companies,
not.
or are
Absolutely
they're
not.
going back and forth and back and
No.
forth, and that's scary as an employer too.
Yeah. Yeah.
Wow.
Yeah.
Well, let's put that as a loss.
Yeah.
That's
Yeah.
that's a loss if that's happening out there. Let's talk about some wins. I need some
Yeah.
positive
You need
energy,
some
Leslie.
positive
I need
energy.
some
Okay,
I
so
need
let's
some
talk
good
about
juju
some
this morning.
wins.
Yeah.
Yeah. So in terms of the benefits side of it, we have seen, especially when you're starting your company, a lot of times, yeah, entrepreneurs will their spouses will hang on to a corporate job that isn't serving their company, isn't serving their families for health insurance benefits. And so when we come
Mhm.
in and we help people look at the gamut of options that they can do, either whether it's for just the entrepreneur or the entrepreneur and, 5 or 6 employees that are on their payroll, and show them that what could be a fit in terms of affordability and access and keeping their doctors. We've had a lot of families be able to leave those corporate jobs that weren't serving them.
Mm.
They only had for the benefits. And so that's really a win for our entrepreneurs and our families and people being able to build their dreams in terms of small companies. And
Mhm.
then we've been able to save companies a heck of a lot of money too. So even if you have 20, 30, 50, 60 employees and we go in and say, okay, what you've got right now is the most expensive thing on the market. Why don't we take a why don't we take a look and some of our big name carriers, to be honest with you, are the most expensive options on the market. So why don't we take
Mm.
a look at some more strategic plans? And then when you get in there and you have the budget that's been going only towards medical, and we're able to save them, 20, 30% on the medical piece, they can take those dollars and put them into other programs like the financial wellness, like employee assist EAPs, employee assistance programs, like having
Mhm.
short-term disability or 401ks, because that bucket of money can go further.
We've seen a lot of wins. We've seen a lot of wins with specifically the financial wellness program, and seeing where, a third to a half of employees don't have beneficiaries named.
Hmm.
And I started my career in the early 90s, and I started in the legal department of a brokerage firm where I was the one who had to tell somebody, I'm so sorry that you lost your spouse, but you're not his beneficiary or her beneficiary. It's
Yeah.
still the ex-wife, or I know you have two brothers and sisters, but only the oldest was named because they never updated this stuff. And so we've seen wins by fixing that.
Yeah.
I think the biggest loss we've seen is that pensions have largely gone away. I mean,
Yeah.
unless you're a government employee, basically there's no pension option anymore. State employees, federal employees still have that. For how long, I certainly don't know. But for the time being, that is still a differentiator between public and private sector. And of course, they make up for that with lower salaries. So having that promise of a pension in exchange for a lower salary sounds great unless the pension is at risk.
Yeah.
And it doesn't sound great anymore. And so the competitive advantage is saying, well, yes, we have a 401k and we have these other things. It's not a pension, but your compensation's higher and you can put some money away for yourself. Maybe has some merit. So let's move on and talk about, if I can, let's talk about how. We talked about why. Why is good.
Yep.
How is you're an entrepreneur, you're not a startup, but you've got 5, 10 employees, 15 employees.
Mhm.
You don't have an HR department. You don't have infrastructure to go out and shop this, right? You certainly don't have it internally. You have to outsource this. Um, How? I mean, other than pick up the phone and call Leslie, which is a great solution for her, and I'm sure for lots of us, but how do you do it? How do you find the right representation? And then how do you make decisions between all of those myriad options?
Yeah. So I'll tell you that I mean, I'll tell you how we do it, right? So I would
Mhm.
say that finding a broker who works with numerous, like I call it wholesalers, we call them GAs, who works with a gamut of products and strategic
Mhm.
products is going to be your best bet to find an affordable, good value plan that fits the needs of your employees. How to find a plan, and when you're looking at choosing, we always recommend that you include, like you said, you can do a lot of carriers will give you up to 6 8 plan options. Maybe if you have 5 10 employees, we choose 4. You choose a high
Mhm.
deductible plan and a low deductible plan. We usually do a PPO and an HMO in both of those categories, and then that allows your employees to choose what's a priority to them. One of the things that we often find is sometimes an owner, especially in that size group, may think about, well, I want a low deductible PPO. And they think about
Mhm.
their needs in choosing the plans in the structure that they're building out, and they don't necessarily think about their employees' needs. And so that's something that we always guide people to do is include,
Mhm.
a few different options, because you may be the owner at the top of the food chain here, but the guy who's not at the top of the food chain may say, I can afford this, high deductible HMO, which is going to be a lower priced option than that rich low deductible PPO. Again, so if you can't, as HR, as an owner, you don't understand. I mean, people barely understand health insurance as it is. Bringing in somebody who can help explain through an open enrollment Zoom call, or be available. Our team is available for employees to call directly and have private conversations with. That's something else I recommend. Is if
Mhm.
your agent or your HR person goes in and has just an open meeting in front of 20 people, do you know what? And says, "Hey, does anybody have any questions?" And
Yeah,
nobody
nobody's going
raises
to
their
be.
hand, it's because they don't want to ask those questions in front of their coworkers. They may have
That's
a
right.
question about, their cancer doctor, and not everybody knows they have cancer, or it's just not something that medical is private, and people are going to have questions that
Yeah.
they want to ask privately, and that's something we always tell people to do too, is giving that opportunity for people to have a resource, and honestly, having a resource that's not not a coworker, not their boss and not their coworker, makes a huge difference to help them find the right plan, because they don't want to talk about it with you.
So there's no question that that medicine is very personal. I
Yeah.
think finance is pretty personal too. We tell folks that
Yeah.
it's there's no one's ever going to be in a hospital gown in our office unless something goes terribly wrong.
Yeah.
But it's still very personal. And in the same way that in a 401k meeting or 403b meeting, people don't want to ask a question because they don't want to look stupid in front of their coworkers. They don't
Yeah.
want to look uninformed. They certainly don't want to say, well, gosh, if I can't afford to do this, how does that? They're not going to admit that in front of somebody. So that creates a barrier to getting good information. So I like
Mhm.
that point. The other thing I think is employees have to make a lot of decisions. Sometimes they have to make them every year,
Yeah.
but often when they're new hires, they have to make them right away.
Yeah.
And when we help clients look at different job offers, we're actually going to look at the benefits too and say, well, this job is paying more salary, but you're going to benefit from X, Y, and Z or not. But employees have to make these decisions and they have to do it quickly. It's like,
Mhm.
here's your new employee
Yep.
kit. Here's your employee badge. Here's where you park. Here's where you put
Yeah.
your lunch. We need these back at 4 o'clock. And
And
that's
it's
a,
like reading a different language too, for the most
it's a
part.
huge amount of
Financial,
information,
yeah, it is. It is absolutely.
and HR departments can't help.
Hmm.
Benefit providers usually can't help because they tend to be tied to one of the solutions.
Yeah.
It's kind of like they said, if all you have is a hammer, everything's a nail. Well, if you work for the 401k provider, every answer points to the 401k. I
Yeah.
mean, not because that's
Hmm.
necessarily not the right answer, but because that's where their bread is buttered. And so you have to be cautious about that too. So employees have to go someplace to get some counsel.
Yeah.
Um, is that something you're able to do? Are you allowed to do that?
Yeah, absolutely. So we're licensed professionals, right? We are certified by the state or multiple states to have these conversations. And for our
Okay.
agency in particular, we also work in the individual and Medicare space.
Okay.
And so if an employee comes to us and what's being offered to them at the company is, 10% of their yearly income, we can say, okay, let's that that put you into some other options and let's take a look
Hmm.
at them. What's going to fit you and your family best? Is it, half your salary to put your kids on your health insurance plan? What doors does that open up on the other side? And so that's one thing that I think that a lot of benefits brokers don't understand the individual and Medicare space, but they can be huge benefits to employees, especially for spouse and kids, if, it's a quarter of your income to put them on your health insurance plan.
I should have mentioned, I see there are actually some hands up among our
Oh,
attendees. If you have
cool.
questions, please put them into the chat box. Sarah's behind the scene and we'll be glad to take those questions and either interrupt us or we'll answer them at the end.
Cool.
So if you have questions, please do put them in the box. Sarah will dissect them and disseminate them as needed. Thank you so much
Okay.
for your
Cool.
participation. Let's
Yeah.
go to the next piece, which is the how we can help, because we talked about why
Mhm.
are benefits good for an employer? Why are
Mhm.
benefits important for an employee? Some of that I think is the employee side. I think is a little obvious. People understand why that matters to them. They may not necessarily understand how it benefits employers unless they are one, but naturally there's some understanding why this is a mutually beneficial arrangement, and the how to do it, which feels daunting. Really, I think the answer is get professional advice that's objective and where you have an advocate and an ally. I think that does matter. So
Yep.
how can your organization, and we'll certainly talk about how our organization can do this, but how can your organization help either an employer who's contemplating either making a change or adding benefits that they've never offered, or individuals who are saying, how do I shop this marketplace? What do I do?
Yeah. So I mean that's what we do. We are the advocate. And if an employer is saying, I just got my renewal, it went up 20%. What the heck do I do? It's reaching out and having those conversations. And then what we do as an agency is we take your data, they call them a census, and we take it and we shop the market. And we send it to different wholesalers and we see what comes back, what fits your needs, what size are you, what do you qualify for. And there's a whole lot more out there than people actually realize. They think the big guys, they think Blue Cross, they think United, they think Cigna, Humana, and those big carriers. But
Hmm.
there are tons of what they call third party administrators that also build health insurance packages, and they'll run on some of the big networks because they partner with like Blue Cross to have a network, but they're priced differently and they're
Hmm.
underwritten, which opens up this entire gamut of space that most people, their brokers are not having those conversations with them. And so if your broker is not having those conversations and are like, you're on Blue Cross, that's it, that's the only option, then that's a big red flag to go and look. And the
Okay.
other thing I'll say on that is a lot of people, and we've run into people who think that going, because they're a small business, the only option they have is to go through their payroll provider for benefits.
Okay.
And here's what I'll say is ADP or the big guys, the big payroll providers you're not having a personal conversation with an agent who's going out and looking at all those strategic options, because they're
Okay.
a lot of work to quote them, and they're very personalized.
Okay. One thing we didn't mention or hadn't talked about was Cobra, and the
Yes.
fact that when there's an event, either a termination of employment or what have you, that there's an 18-month window. Sometimes I think it's a little longer, but generally it's 18 months, right?
Yep.
Where you can stay on that plan. So people think, oh my gosh, I have to wait till 65 to leave because of health insurance. It's actually 63 and a half. Where if you were to, assuming you weren't going to work anymore, you wanted to retire. Some people don't retire or
Hmm.
leave their employer because of benefits, because of their health
Yes.
insurance. But actually at 63 and a half, you can still have access to that plan for another year and a half. It might be expensive as heck,
Oh
but
yeah.
you
Yeah.
can if that's something you want to do. I think a lot of people don't think about that necessarily. And then Medicare,
Hmm.
Medicare has multiple parts. Medicare is a program unto itself, and
It's a beast.
it's
It's a
a
beast.
it is a nine-headed hydra.
Yeah.
People who are 64 years old are getting
Yeah.
bombarded with
Yeah.
mail. It's like being a junior in high school and getting college brochures,
Hmm.
but worse because it's so
Yeah. And your
confusing.
phone, and there's laws built around people being able to spam you and call you and show up on your doorstep. But people are always finding ways around that. Or they're like, oh, you signed up for I don't know, a free coupon card. And somehow that gave us permission to blow you up with Medicare, and
Yeah.
come stalk you on your front door. And it's really a very there's a lot of piranhas in the industry. Um,
Without question.
yeah, it can be a very slimy space. And so that's something that we start talking to people. We're out doing Medicare education at companies. We're doing Medicare. I've gone to Sunday school classrooms and done Medicare education. I mean, we go out and we talk to people about what they're, and there's some choices when you get on Medicare that if you don't make right away, they're lost to you.
Or more expensive. There's surcharges and different things there too.
Oh,
So
yeah.
Medicare Part A
Yep.
is available at no cost to people 65 and older.
Well, not no cost. You've paid for it.
Well, yeah, okay. No additional, no further
No
premiums. Yes,
further
you've paid
premium.
into it your
Yeah.
entire
Yeah.
working lives.
Yeah.
Fair.
Yeah.
But it's available at no premium cost.
Yes.
I was always under the impression that you needed to sign up within 90 days of your 65th birthday, no matter what, for Part
Yeah.
A. But what I have learned, and this was not common knowledge, I don't think, is that if you're still working full time and you're employed with health insurance, you can, instead of signing up for A, you can keep that plan and not worry about signing up for Medicare A. And that potentially can be important with high deductible health plans, with health savings accounts, and with some other resources. So if you signed up for Medicare, you're no longer eligible for HSA contributions, correct?
Yes, that is, and I pause on that because they are doing some legislative work on that, and so
Constantly.
constantly. We hope to see that change. The other thing I'll say is that doesn't necessarily apply if your employer has less than 20.
Okay. So different
So,
employers
yeah.
have different rules.
Different employers have different rules. Like you should talk to someone. If you are approaching the age of Medicare eligibility, you should have a conversation with someone. Because what we're
Yeah.
seeing is employers less than 20, the carriers weren't necessarily enforcing it until recently, but Medicare's primary if you have 20 employees or less in a company. And people were just staying on the employer plan. And then all of a sudden they're like, why am I getting this bill? I'm like, remember, I've been telling you should go to Medicare for like 3 years and you haven't listened to me. It's because they're no longer going to pay your bills.
Wow. All right. And I think now Medicare is funded nationally, but Medicaid, which sometimes gets confused, is a state payment, right? And that's only for that's like for the folks who simply can't pay their medical bills. Essentially, it's for folks at the lower end of the economic spectrum. So we talked about benefit packages. We talked about how you can help financial wellness programs. Just to sort of bring this home. For employers who want to talk about financial wellness programs, it begins with employee education. And we do either on-site seminars or webinars like this one, where we'll take a program of 10 basic steps to wealth building and things people need to know, and then tie it into a conversation about all the benefits currently available through the employer. Because what a lot of times we just talked about, the fact that employees have all these choices and don't know how to make them, and they're hearing just from that one vendor or that one person, we can actually say, here's everything.
Yeah.
This is everything down to pet insurance and prepaid legal and whatever the other things are, and paid time off and eligibility and vesting and all the things that people need to know that are in the fine print that they have to find. And we then help people with consultations one-on-one. Employers can either have us on site or can have us remote. We will work with employees one-on-one. We do 45-minute consultations. The employee pays nothing. And it's a chance to ask questions about not only their benefits, but what's going on outside of their prior employer situation, their personal savings, their spouse's employment, all the things that they can't really ask anybody at work. And because we are not part of a vendor and we don't sell any of that product, we're not trying to push one solution versus the other. We can be as objective as we can be. So that's something we've been doing now for both big companies and smaller ones with incredible results. The employee surveys have been off the charts. Oh my God, thank you for doing this. And the cost to employers is so small, relative to the cost of, for example, the insurance package to begin with. This is a footnote. And so for companies that want to explore that, we're certainly looking to do that. And it does mean a lot of times piggybacking off what you do, which is you bring in the actual insurers and help negotiate the plan, and you're the advocate to put in the right solutions. And then we can help folks look beyond that in terms of some of the financial decision making for their household. So we make an interesting 1-2 punch, although you're one in that scenario. which I'm
Well,
comfortable with.
and people deciding and I think a lot of people, Eric, and this is where you guys can come in, is an HSA. I've heard HSAs are great. Is an HSA right for me? And that's a conversation we have with people often
Yeah.
is it the right fit? Do you benefit from that pre-tax offering? And that's a question that Eric and his team can come in and help you make decisions on.
Yeah. And for the record, I'm a huge fan.
Yeah.
I think the HSA is the greatest tax invention ever because
Yeah.
it's the only triple tax-free thing there is on the in the U.S. tax code where you can deduct a contribution, you pay no tax on the growth, and then use it tax-free. The only caveat is don't die with it.
Don't.
That is a tax nightmare. Seriously, you have to use it. You don't have to use it that same year.
Well,
People
now you can use it
confuse
for long-term care. That is one of the
correct
regulatory things that
or,
we've
or
got.
Medicare premiums.
Yeah. Yeah.
So people confuse a flexible.
Very, very specific on the how and the when on that, but yes.
So people confuse it with flexible spending accounts, which are sort of the use it or lose it. And the use it or lose it on healthcare usually means you wind up with 3 pairs of glasses at the end of the year that you didn't necessarily need. Though on dependent care for single parents or parents of 2 working households where there's daycare expenses, the flexible spending account for dependent care is a total home run because it allows you to do some of your daycare pre-tax, which is a big deal. It can save you real money.
Yeah,
So-
we're looking at actually installing one of those for our agency as like directly as well.
Oh, fantastic.
Yeah, I mean,
It's
everybody.
it's a great thing.
Yeah, well, most of our employees have young kids. And so if you're looking at how can you benefit your team, how can you give them an additional, and there's a very small cost, it's mostly their money, right? It's a very small
Yeah.
administrative cost that you're,
It's inexpensive and it's right in the tax code and it's up to $5,000 a year. And, if you're paying combined 25% income taxes and you can put $5,000 in pre-tax, you're saving $1,250 a year on daycare. It's $100 a month.
yeah.
And it costs almost nothing to set it up. So it's a footnote. So you've put together a resource that we're making available to everybody watching this webinar, either today live or in perpetuity. I'm going to put this on the screen. Everybody take out your phones, go to this QR code. Tell folks a little bit about what this resource is and why they're going to want a copy immediately.
Yeah, absolutely. So it's basically just breaks down the different areas. Like, what are you looking at offering? I think that we get so much information, and then so much of the information we get is unclear that it all starts to spin around like a tornado. Like, I'm supposed to decide what is disability insurance? What is short term? I need dental, I need vision, I need health. Doesn't my health insurance cover dental? It covers the gamut and breaks down the different pieces as just a very basic starter as to helping organize your thoughts and a little information to employers when they're looking at offering benefits.
All right. So you have about 5 more seconds. Get those phones out, do the QR code because, Leslie's number 1 and I'm number 2. We've established that today, but we also have a resource for everybody if you'd like. This is a free ebook on the 10 ways to support your employees' overall wellness. Financial wellness certainly being part of, but not all of that. And this is downloadable for free. It's an easy read, and hopefully it'll get your juices flowing in terms of things that you want to consider either for your company or even for yourselves. And so that's available to you. Sarah, do we have some questions in the queue? I know we had some hands up, so let's see if we can get to some Q&A, and then Leslie and I will make some final remarks as well.
We do have some questions.
Fantastic.
These kind of jump back to the beginning of this conversation, the whys of offering benefits.
Okay.
How do employee benefits influence motivation compared to direct financial rewards?
I think it's access. I think you're valuing your employees if you're giving them access to better plans versus the direct financial. So a lot of times people look at, am I going to reimburse my employee to go and find their own plan? Am I going to pay them more salary? I think you're taking care of their health and their family, especially if they have kids. It can be a really big stressor if they don't have access to good plans.
At some point, and maybe the date when this occurred, but at some point, health and welfare became the employer's responsibility in the U.S. Whether it should be or not is, again, that's a later night conversation, but it is. And so as an employer, showing employees that you care about them as more than cogs in your wheel is darn important. And because most employees can't get the same quality, the same pricing, the same advocacy as they can by using their employer benefits, the employee benefits have to come first. That's the first place to look. It doesn't mean it's the right answer for everybody. It's certainly not.
Mhm.
There are reasons why there might be other solutions. There are reasons why group life insurance might not be the right life insurance for your family, or it might be a start, but not the whole picture. There are reasons why you might want to say dental insurance is really important for us. We got 3 kids in braces versus, we're at an age where dental insurance might not mean as much to us, and you can decide how you want to do that. You're also passing some risk. So
Mhm.
if you're buying insurance options, what you're trying to do is pass risk that you can't or don't want to bear. And so each family, each person has to look at, and employers have to make it available, but then
Yeah.
you have to look at it on your own and say, is this benefit worth this premium based upon the risk? We do that every day. We make insurance decisions. Every year we make insurance decisions about our car insurance. It's a
Yeah.
simple example, and it's not an employee benefit, but it's a simple example where people sometimes spend a ton of money for comprehensive care for the dings and scratches that won't change their lives at all, but maintain very little liability coverage, which could be life-changing if there's an accident and somebody gets hurt. So you want to insure against the risks that you cannot bear or that are financially beneficial not to bear. You don't necessarily have to insure against everything. You can be insurance poor, just like you can be house poor or just
Yeah. We always tell our agents, like the people that all my account managers, I'm like, our job is to give information and answer questions. Our job is not to determine someone's risk tolerance. Because
right.
your risk tolerance, Steve's tolerance may be different than Susie's, right? It just depends on where their personal values are and honestly what their financial situation is. If Susie has, a pocket full of inheritance cash that she doesn't need to pay insurance for, then that's a totally different situation. And so it's not up to us to decide someone's risk tolerance, it's to help them figure out what their risk tolerance is.
Right. So, and that's true for everything. That's true
Mhm.
for how much you put in a 401k. It's true for how much you do in personal savings or investment. It's true for how you choose your benefits, how you choose your insurances, what risks you bear and which you try to pass, at least in part. Great question. What else you have there for us, Sarah?
We talked a lot about small businesses and large businesses, but Leslie had mentioned for solo business owners.
Mhm.
Can we talk a little bit about options for people that are not actually having employees?
Yeah. So it's different per state. Some of the small carriers, small group carriers, small business carriers will write down to 1 or 2 people, which could be, again, depending on the state, husband and wife. Texas lets you do husband and wife as long as you're both owners or you're both receiving W-2s. Other states do not. And so we would look at where you are and what's available to you. And maybe it's a small group carrier. Maybe it's an underwritten plan. They've rolled out some really different options that are underwritten on essentially a large group chassis. And you get a K1 or a W-2 at the end of the year from this large group employer that allows you to have access to their PPO plan. And so we've started working with some of those carriers as well, which we have found to be a really good fit for a lot of our solopreneurs.
Just from benefits beyond the insurance piece for
Mhm.
solopreneurs, you can do your own retirement plan and have really high limits, so long as you're not also having employees. If you have employees, like a SEP IRA is a simplified employee pension. It's not really a pension and it's not really simple. But what it is a way to put up to 25 cents on the dollar away in a pre-tax account, which you can't do with most 401ks, depending what you're earning. However, if you have employees, you have to do the same percentage for them as you do for yourself. And so most employers don't do that.
You have
Certainly
3
they
years
can.
though. 3
Sometimes.
years.
Yes.
Yeah.
There's always an asterisk, I
Yeah.
realize, but a SEP is great for someone self-employed, which really is what it's designed to do. And as a solopreneur, that is certainly something to consider as well. So you have options for your own retirement. You also have the solo K, the uni-K, the 401k for one person. That's also something to look at. But there are retirement plan options. There are insurance plan options. And Leslie and her team can help a solopreneur with that. It just so happens, and I love that question. I'm not sure who asked it, but Sarah is in fact a solopreneur. So that's really awesome that she got an answer for that. Now both of us have gotten free advice, Leslie, from you. We love that.
Yeah.
So thank you for that.
Yeah.
Anything else in the queue?
Yes. So if salaries are already meeting their employees' needs, are benefits still going to play a role in retention?
Access.
Oh yeah. Oh,
Yeah.
absolutely.
It's access.
Absolutely.
hmm Yeah. And then your salary, your employees are they expect more every year. Not
It's funny how that works, isn't it?
expect more every year. And so
Yeah.
being able to, it can be a cost-effective way instead of just giving salary bumps, like we talked about the tax benefits earlier, the contributions, to increase the packages for your employees as, for retention as they've been with you year after year. If you're not already offering, but I think every time I go back to access there just isn't the same access, whether it's network, quality of network, access to providers, or just cost. Sometimes the cost, depending on the state, because that's how our individual market is running, is absolutely significantly more expensive than it would be through your employer.
Well, the other thing, and this is maybe a little more subtle, but if you're relying on salary to be the only retention tool, and some company comes along and offers an extra $5,000 in salary, you could have somebody jump just because that's the only value proposition, and you could lose somebody really terrific over something relatively modest
The
to an
more
employer.
layers
So,
you're offering to your employees, the tighter their retention is stronger.
well, you sound like a bank now. It's funny because banks always do that. The more lines of business that you have as a customer of a bank, if you have the credit card and the checking account and the CD and all these things, it's harder
Yeah.
to leave.
Yeah, it is. Yeah.
But quite frankly, if your family's welfare is highly linked to your employer, that is a retention tool. And it's not just a nice thing to do and something that shows that you care. It's also a retention tool. So it's not it's more altruistic than selfish.
And I would say too that like if you have an employee and they've spent 50% of the way towards their deductible since January, choosing to go to, the employer down the street in March, they're gonna have to start over on the deductible and their spend. And so while it's not necessarily a determining factor, it adds into people's decision-making process.
So yes, as a retention tool, I think solid yes from both. Thumbs up. We feel like movie critics now. We both gave thumbs up. What else, Sarah? Anything else in the queue?
Yes. How should organizations balance between mandatory legal benefits and optional benefits?
Oh, that's state by state. In Maryland, we have to have everything all the time. I don't know how Texas works, but a tie goes to the employee in Maryland all day. And there are a lot of things that are required, and certainly if things are required, you do them. But state minimums, like anything else, aren't necessarily where you want to reside. I think you still want to shop for something appropriate that's helpful to your employees that may be in excess of a state minimum, even if a requirement has to be met. And there are a lot of them in certain states, ours being one of them.
Yeah. And that's something we help people look at too. So like if somebody has to provide health insurance because they have more than 50 employees, but all of their employees make $10 an hour, helping them look at what those options look like. Are we looking at, an ICRA plan, which is pulling in some of the individual subsidized options into the gamut of what they get to choose from? Are we helping them look at, their kids and maybe there's a subsidy available for the children? And so what's required versus balancing that with voluntary? I think obviously if it's required, you have to do it. But we're getting more and more employers, even small employers, asking us about employee assistance programs because they care about mental health, right? Because their employees are better on the job and are better as humans if they are taking care of their mental health. And so people are really, I think, changing the way they think about I'm only doing this because it's required and starting to care for the validity of their employees.
Well, benefits also, I think, have become table stakes in a lot of hiring contexts. So it's also nice to have some that are creative.
Mm-hmm.
For us, it's responsible paid time off where we don't count days or hours. It's, it's not the same as unlimited paid time off, although it might as well be because as long as it's responsible, then we're good. That's a big deal for folks. That's
Hey, Eric, I love that
flexibility.
you called it that. We have always had unlimited, but I love that you call it.
No, it's responsible paid time off.
Yeah,
You
I
still
love
have to
that.
have coverage and get things
Yeah.
done, but of course we'll be flexible. So responsible paid time off, flexible occasional work from home. Different organizations have different rules around that, but that's something particularly young people are looking for, and whether that's doable or not, whether it's scheduled or not. Some companies say great, some say no, but that's a differentiator and a type of benefit. Financial wellness we talked about is certainly one of those. There's also, it's amazing how much bang for your buck you can get with little things. Like for us, just having drinks and snacks is the most popular benefit here.
People like snacks.
People like, give me some Cheetos or something. Like everybody loves snacks. So if there are little things you can do that just, as opposed to having a vending machine. You know, we've seen these employee wellness packages and programs, employee assistance programs. We've also seen tuition assistance programs. You know, 401ks, traditionally, you only matched as an employer if an employee contributed. Well, today, there are ways to tie that to student loans so that if you have a lot of young employees, for example, and they're paying student loans so they can't also afford to participate in the 401k, there are ways for the employer to make 401k contributions on their behalf, even though they're not contributing, because their student loan is of a certain percentage of their income. So there's creative ways to think a little bit outside box based on who your employees are. Leslie mentioned an example where everybody's hourly and at a $10 rate. Same thing's true if your employees happen to be very young or maybe a little older, or there's a certain demographic that, you know, certain industries appeal to certain demographics sometimes. So being creative, I think, really does matter, and it can differentiate you, because I think health insurance has become a table stake. It's important, and it's important what you pay for it and how the coverage is. But I think there's an expectation that every employer, maybe I'm wrong, but that every employer has it. And I'm sure there's some out there going, we don't tell anyone. But that seems to me like there's ways to be creative outside and beyond that.
Yeah. Like, put your employees in a rough spot when you don't have it. I'm getting phone calls going, my husband works for this company and I'm a stay-at-home mom and they don't offer benefits and my kid can't go to the children's hospital. What am I supposed to do?
Yeah, you don't want to make that call, much less. Yeah, absolutely. All right. Well, I think we have time for one more, and then we'll have a few closing remarks.
All right. Final question.
I was going to say, Sarah's gone.
Is still here.
She's signing up for her solopreneur plan right now. I can tell.
I'm on Leslie's website.
There you go.
It wasn't so much a question, but I'm going to turn it into one. They were talking about the importance of including things like benefits in a job description. So Leslie, what would you say about including things like actual salary numbers? I know that's been a conversation I've seen a lot lately, is actually including the salary numbers in a job description, including description of those benefits. What have you seen in that aspect as far as increasing hiring?
So I'll answer this as an employer who has been putting out putting out job postings and trying to recruit employees. Is I put a range for salary. And the reason I do that is because I could get a candidate who has good skills, but zero experience, or it could get a candidate who has skills and experience. And so I put a range in there of what that, and then I say based on experience into my job offerings. I also put benefits because I think sometimes, again, if I'm a single mom or I'm a single dad and I have to provide benefits for my kids because it's in my divorce decree, those things are going to be very important to me, and I'm going to be more drawn to that job offering.
Yeah, I think we typically do put a range. In fact, I think some of the job sites now require one to even use them.
Yeah.
Employers are being asked for full transparency on some of those issues, and I think that's perfectly fine. I don't know how much onus there is on job candidates to be fully transparent. Sometimes I wonder who wrote their resume. But nonetheless, it's for employers to be able to say this is what's included and this is part of the deal, allows the right potential employees to ping them. They're not, grossly overqualified or grossly underqualified.
And it saves everybody's time, right? Like if I'm looking for something and I get in and I assume you're offering benefits because I think most employers do, and you don't, then I've wasted your time and mine.
All right. Speaking of not wasting time, we have 90 seconds for your closing thoughts, and then I'll close the show and we'll be done.
So whether you work with us, the Shields agency, or you talk to another broker, or maybe you have a current broker and you have more questions, it is a complicated, ever-changing, I feel like I'm trying to rope the wind to hold on to all the regulations all the time. Talk to an expert. If you're thinking about it, if you have something in place, make sure that you're shopping the full gamut and have someone come in and do a consultative experience with both you for your plan strategy and your employees.
That was well done. You wasted no one's time. I'm going to try and do just as well. And I love this idea of not only getting some advice, But I think it's probably worthwhile to talk to 2 or 3 different folks also, and just get a feel. Where are you comfortable? You know, we're not for everyone, but we are for the right organization or the right family. So if you're an employer and you're contemplating how can I help bring financial wellness or other types of wellness to employees, I would say let's have a chat. Their email address is on the screen for both of us. If you want to have your benefit plan looked at, I know Leslie will do a stress test for you. I'm happy to do the same on our end. And we would love to chat with as many folks who would like. But with that, I thank everyone for joining us for BFG's webinar. Leslie, thank you.
Yeah.
You're a
Thanks for
wealth.
having me.
You're a wealth of knowledge, and you are in fact number one. I am signing off as number 2.
Thanks, Eric.
Thanks, everybody. Take care.
Bye.